Oh, there you go. Oh, goodness. How are you, everybody? Welcome to tonight's live episode of the New Zealand First Home Buyers Guide and Insight. Once again, we are thrilled to have you join us as we dive into another important topic that could impact our or your home buying journey. We appreciate your support. So please continue to follow this series or watch us, rewatch again on YouTube on our YouTube channel. So you'll be able to refresh yourself. I'm trying to do the same thing as well, especially when I this certain topic in mind. It's like I have to go back to this topic. So we have this playlist on YouTube, and this is now our 44th episode.
44.
Great.
That was so quick, yeah.
Yeah, I'm Juvie, your host, and we have.
Hi everyone. I'm Marian again from of course at the Juvie's co-host with this one, a former real estate agent, kind of like taking a little bit of a break from the industry, but of course would want to keep my knowledge up to date. And I think like having this kind of show with Ate Juvie keeps me also in that loop of what's happening, even though I'm in a different industry at the moment. I would
Yeah,
of course still go back.
yeah, looking forward to having you back on what do you call that kind of industry? Real estate.
Real estate, yes.
And what I
So
know is when you want to build wealth, the highest way actually is getting into the real estate.
yes,
We
at
money, we build business to earn more. There are many ways to earn more money, but the top, that's what I've heard, is the real estate. Well, if you know how to manage your property, of course.
yes, that's so true. And I think that's the reason why it's very good at it that we have this kind of shows. We've invited before financial advisors, we've invited mortgage advisor, we've invited lawyers, and of course even mortgage manager from a bank. And I think like gaining a lot more knowledge in terms of like what type of property actually would you want to buy. And I think like having a real estate agent as a colleague is actually quite cool too, because if you've got friend that you keep on like, if he or she is in the industry, they can give you updates and insights inside what's going on, what's happening, what sort of property is actually like very good, the high yield property, like high yielding property. Like they will also give you like, usually I used to give my friends, my clients, that insight that, okay, so what type of area and what type of property do you think it's good for me to buy, Marian, because I want to buy, let's just say, an investment property. And of course the real estate agent would know which area is actually very kind of like not just popular, but also it gives you something, the ROI back very quick.
Yeah, no, it's like it flashes back what we have discussed since the beginning when we started this last year, November, and the type of properties that we have to consider, all of those things. So, guys, if this is you are new to this channel, please, we invite you to browse on my YouTube channel to have a look at what topic we have already discussed. But from time to time, we're going to bring that up to give you a light bulb moment. And of course, this is another interesting topic because, recently, it was just last week when everyone was kind of surprised, or we were expecting for the latest update on the OCR. So we're going to talk about what is this
Yes.
OCR. This is very important for anyone who's going into a home buying soon or later, or building their wealth. This impacts your mortgage, our mortgage. So yeah, I'm actually happy. And so we have invited
Yay!
in Marianne. Would you like to introduce? Because you were the one who introduced me to this person.
Well, of course, everyone, if you guys are new to this channel, as what Ate Juvie said earlier, this person is actually very, very, like, it's been, I think, no, I don't know, more than 3 times that he's been in our show, Ate.
Yeah,
And
looking
I think four
inside.
times. Yeah. So he's one of our favorite person to always invite, especially when it comes to giving us more updates, in terms of borrowing money, mortgage advice, and everything. And it's very, very easy to talk to. So I would, of course, I would like this privilege to welcome one of my very, very good friend when I was in real estate, and of course still now, my colleague Sanjeev Jangra from Loan
Yay!
Market. Hi, Sanjeev.
Hi guys, how are you?
We're going.
Good to see you guys again.
Yeah, I'm happy
Good.
that you are really finding time to guest in our show again, because we're really we kind of rely oh, what do you call that one, on people who are more expert
Can
when
give
it
more.
comes to mortgages. So yes, give us an update, or maybe we can start with what is really OCR.
Yes, everyone knows there's a bit of a news out there. OCR has come down, bit of a relief for existing mortgage holders. So what's OCR? So that's basically official cash rate that the Reserve Bank sets for the banks. So banks usually borrow money from either overseas or they borrow from the Reserve Bank. So Reserve Bank sets a rate, and then the bank will add a little bit of margin on that rate, and then they will give it to you and I, for example, right? So to give you an idea, official cash rate is there just to control inflation. So Reserve Bank wants the inflation to go up between 1 to 3%. So they don't want your um, let's say vegetables, right? So your vegetables shouldn't go up by more than 3% a year. But if you go back to, I don't know, 2021, things were getting out of hand, right? So that's when Reserve Bank saw, hey, look, because the interest rates are so cheap, everyone is just spending money like there's no tomorrow. We need to control it. And that's when they started to increase the interest rates so that the demand goes less, right? So that's how
So
they control inflation.
if you can remember, what was the OCR in 2020 and in 2021?
So if we go back to say, I don't know, between 2009 and 2016,
Right.
average OCR was somewhere around say 2.5%, 2.25%, and
That's
then
so low.
average, yes, so average interest rate say for 1 year mortgage was somewhere around 5%, right? So that's the rate you've been paying, around 5%. But then comes COVID-19, and all of a sudden there's a bit of a panic, and then everyone across the globe started to drop the interest rates, and Reserve Bank dropped the interest rate down to 0.25%, all the way down to 0.25% in March 2020, right? That's when we
Yeah.
had the first COVID lockdown, right? Because they thought a lot of people were going to lose the jobs, people wouldn't have means to pay off the mortgage. Let's just drop it down so that the economy will still survive. But the biggest mistake they made, they left it at that level for too long, right? So they left it at 0.25% for till I think September 2021. So over
Yes.
almost 1.5 years, money was so cheap. To give you an example, you would go to the bank, you borrow $1 million. That was only costing you less than 2% interest rate, right? So you were getting 1.99, or in some cases for the new like first home buyers, banks were even offering like 1.3%, right? So you're
Wow.
borrowing $1 million from the bank. Your interest rate on $1 million is only 20,000. What would you
That's
do
true.
with it? You would go buy an investment property. Rental income is say $40,000 from that, right? And then to the bank, you're only paying 20. Even after paying the mortgage, you're making $20,000 a year, and your property is going up by 20,000 a month,
Yeah.
right? That's
I was
how people.
actually I was actually thankful for the 2019, COVID-19, because in 2020, when the OCR went down, like what you said, of course, the
Yeah,
mortgage rate was low. So we were able to pay 3.09, if I am not mistaken, for our
yeah,
mortgage rate. So it was like, wow, if only I know, then I would have locked it up for 3 years,
5 years.
5 years. Yes,
Yeah,
but
but
I didn't.
Yeah, because back then you could get banks were offering like 2% for 5 years, right? So really,
Yes.
Yes.
really low rate. But people thought the interest rate will keep going down. And there were
Mhm.
some funny ones out there as well. So some of them were saying banks will actually pay you money to borrow from them. I was like,
Oh,
are you nuts? I mean,
Was
yeah.
it
that the
did
Sanjeev?
happen.
Was that the cashback or something? They had those cashbacks, right?
Yeah, so banks were offering you like, up to 1% cashback. So you borrow
Yeah.
$1 million, they were giving you, obviously they were giving you ultra low interest rates. And on top of that, they were giving you like eight to $10,000 cash as well on top. Hey, just enjoy. Right.
I know.
Oh my gosh.
Yeah,
I,
so
I
that's
remember
what,
that it was a very crazy market. And then December, that's when it started going up, right?
yeah, so I think they started to increase it in about, from memory, October
December
2021 was the first increase.
20. Yeah.
But they still didn't increase it at that speed. They increased it a little bit,
Mm.
but then people were like, it's only extra 2.25.
Yes.
Still, let's buy more properties. And they were still doing it. But then come November, they were like, oh, no, there's another hike. That's when
Mm.
people realized, okay, now it's going to get out of hand. So November 2021 was the peak of the property market cycle. And from there, interest rates kept going up. And then I think until May 2023. So in May 2023, the interest rate, the official cash rate went up all the way to 5.5%, from 0.25% to 5.5%. To give you an example, let's say those people who bought $1 million property, they were paying 2% interest rate. So on $1 million, you were paying only $20,000 a year in interest, right? All of a sudden, when the mortgages came for renewal after a year, now they're paying 7% interest rate. So you're paying $70,000 on $1 million. So all of a
Ooh,
sudden, your repayments have gone up by $50,000. Where are you getting the 50,000 from? Right?
I know that
That's
hurts.
that did hit a lot of people, and a lot of people had to sell properties at a loss, and
Mm.
still or work two, three jobs or do overtime or whatever they can do, or have flatmates living with them to survive.
So,
Mm. That's
talking
true.
about the update of the official cash rate now, because after a long time, not really very long, but few years, and we are all hoping for this because of inflation, and yeah, it affected the inflation, right? But
So they
because
left
of
it at 5.5% for almost like I think year and a half. So since May 2023, it's been sitting at 5.5. But on the 14th of August, no one was really expecting it. But all of a sudden, Reserve Bank came out. I mean, because in the previous announcements, they were saying we don't have any intentions to drop the rates till say mid of next year. But all of a sudden, they saw that the economy is now crippling. We need to drop it before it's too late because a lot of people have started losing jobs and stuff. And then now we have a 0.25% reduction in it. And with that 0.25%, banks have started to drop their interest rates.
that's true. So what now? I know ANZ is the one of the biggest bank who has already dropped
Yes.
their mortgage rates. What are the
Yeah.
chances of people availing home loan, first home?
Yeah, so to give you an idea, in the last say 2 weeks, the interest rates have come down by almost 0.5%. Right? So
Mm.
that's a lot within like last 2 3 weeks, and we are again expecting another one, or I mean at least one more cut before the end of the year. There may be two, who knows, right? So if they come down, that's pretty good. Yeah, I would love to see that. If that happens, I
But
mean, obviously your borrowing capacity will go up as your interest rates go down, and it will be a bit of a relief for existing mortgage holders. Like all of a sudden, your repayments going down. So, give you an example on a say $700,000 for mortgage. Like if you compare what it used to be 2 weeks ago versus what they're offering now, you're saving almost
mm,
like $40 $45 a week already. But if they
mm,
go by
mm.
another 0.5%, then you're saving like $100 a week. So that's like it's good for a first home buyer or like a young family. Yeah.
And there is a chance as well, Sanjeev, now that like Ate Juvie has an existing mortgage that she's paying right now. There's a high chance that it's better for her to kind of, let's just say, talk to you and kind of, recalculate what can she actually save if you fix her current mortgage?
100%. A lot of people would have their mortgages fixed for, say, 2 years, for example. But we can do some quick calculations and see if you can break that 2 year cycle. Because if you are sitting very close to 7%, you might as well just break it now before it's too late. Break it
Mm.
and then see how much more savings you will make if you do it. Or if your mortgage is already coming up for renewal, don't get into the trap of fixing for too long, right? So some people would say, let's say, for example, if you go for a 3 year rate, you'll be paying 599 versus 6.5% for 1 year. So a lot of people will be like, oh, because it's 0.5% cheaper, let's go for 3 year rate. But
Mm.
then within 6 months, you will realize your 1 year rate is below 6%, and then it will keep falling. So while someone like me next year will be paying, say, 5.5%, you are still stuck at 6% for next 2, 3 years.
I know it's quite hard
What?
to decide for that one.
It is. Again, it depends. So you can do multiple things with it. I mean, again, there's it's not a personalized advice. It's just a general thing.
Yeah.
If you are very risk adverse, again, first of all, I need to understand what your personal situation is. If you think there will be some changes coming to your financial situation, then you go for a long, like, maybe go for 2 years, for example. But if
Mm.
you want to take a little bit of risk, other thing you can do is you can split your mortgage into 2 or 3 parts. It's called hedging, right? So
Mhm.
you put a small portion on 6 months, 1 year, and 18 months, and see how it goes.
Mm.
So you're averaging it down.
Isn't that what you're doing at the moment or no? It's not hedging.
Yes. So
Majority of
I
our clients, yes. If you would have asked me this question, say, a month ago, that's exactly what I was doing. So I was splitting the mortgage, this. But at the moment, majority of our clients, we still split, but we're going between 6 months and 1 year only. We're not going anything longer at the moment.
Yeah, that's what I've decided as well recently. I splitted our mortgage
Yeah.
into three. So I didn't know it's called hedging. So one
Yeah.
third is for 6 months, one third is 1 year, and the other third was 3 years. Because you'll
That's it.
never know. So it's like
Yeah.
a poker game that bet on this one and bet on the other one. So yeah, I'm happy that one third of
Yeah.
my mortgage will now have a lower interest rate the next time we're going to what do you
Correct.
call it? Fix. Yeah.
Yeah, it's better to have, say, $200,000 on a 3 year versus 600,000 on a 3 years, right?
Yes.
Or
Mm,
six
yeah.
months. Yeah, so you've only taken a little bit of risk, but not much. So you can still split it. Yes,
So do you have any idea if it will continue to go down? Well, you've mentioned that it might.
it
Yeah.
will. It's not
Oh,
might.
okay, that's
It has
good.
to. They will. It's just like how soon they do it, because sometimes, I mean, the whole purpose of this OCR is to control inflation,
Yes.
control people's spending
Spend.
behavior. Because let's
Mm.
say they have just had this first cut, and all of a sudden people go crazy. They'll be like, "Oh yeah, the interest rate will now start coming down. Let's buy, I don't know, a new boat, right? Or let's just do some more innovations and stuff." Which is going to be very very hard in this time, because again, things are very very tight. So this 0.25 is not going to make much difference, but it just gives a bit of a positivity in the market. People will
Mhm.
start spending, but still a little bit of spending won't change anything. I think the bank
Mm.
has to reduce the rates, and we are expecting within the next, say, 6 to 12 months, the rates will come down by at least 1%.
Will the
Oh,
OCR
yes.
also
Yeah.
affect the other interests like home no, not home loan is already true, right? Car
Yeah.
loan, personal loan, will that also go down or it will still
Yes and no. So those personal loans, they're like completely different product, because banks want to make more margin on it, because most of the time they are like unsecured lending. So you will always see
Mm.
those sort of loans will be around 9 to 13% sort of a range, or can even go up to 20% depending on your credit score and stuff. But mainly those companies, so let's say you go to MTF Finance, or like, I don't know, some of those car loan companies, they
Credit
borrow
card.
that money from the banks, right? When the bank is
Mm.
lending them on a floating rate of say 8.5%, they have to add another 2-3% margin on it, and that's when they sell you at 10, 11, 12%. But if the
Mm.
floating rate goes down to 4%, now they have a much bigger room. So then all of a sudden you'll see some special coming up for car loans. Okay, don't need to pay 12%, let's pay 8%, right? Because they're
Oh,
making the margin. Yeah.
yes.
Um,
Yeah.
it's a bit of a good news and bad news because with OCR, if the OCR goes up, it's really good for people who have a lot of money sitting in their bank accounts, especially
Mm.
retirees, right? So older people. So they have, say, let's
Mhm.
say they have like $200,000-300,000 sitting in their account and they're living off the interest that they're
Oh,
Yeah.
getting from there. So at the moment, if you check your money at say, I don't know, in a 6 months term deposit, you were getting like 5.5, 6% sort of interest. But as the OCR will go down, you will keep getting less and less. So that's why I go back to 2020, 2021. You were hardly getting 1% from the bank, right? So you
oh,
were so
Very true. Yeah.
yeah, so you were putting $100,000 in the bank, and they were giving you $1,000 in, say, interest for a year. Out of the $1,000, you're gonna pay tax. So you were only getting like $600-700 out of on
Yeah.
$100,000, right? So that's when people realize, oh, why don't I just use this 100,000 as a deposit and buy a $500,000 for property, right? I'm
Yeah,
borrowing
that's
400
true.
from the bank, and within 6 months, my house is going up by $50,000.
mm.
Like
Yeah,
I'm doing
that's
50,000
true.
rather than only making 500.
Oh,
That
yeah.
was,
So
yeah,
that
that's
means to
a good
say
thing.
not everyone is happy when the OCR goes down.
Older
I really
people are like that,
gotta
they just hate it, right? People who live off the interest rates, they hate it. They
Yeah.
don't want the interest rates to go down.
and
Because
that's what they are
mostly home
doing.
buyers or first home buyers are actually benefiting on this one.
Yes.
Correct.
Yeah,
I mean,
first
it's
home
it's a
buyer.
bit of a it's good news for people who haven't bought the house yet, because for them it's a good time, right? The interest rates are up, the demand is low. If you buy something today for say 700, and tomorrow the rates go down by 1%, your house is worth probably 750 all of a sudden because people can afford more. There will be more demand for property because the interest rates are
Mm.
cheaper. You just made money.
Mm.
Yeah,
Oh, so
Yeah,
since
it's
you
true.
mentioned it, the price, the
yeah.
OCR went down, and people will have more ability to or capacity to buy the first home. But what about the prices of the home? Is it gonna go up soon or
Yes.
not yet?
Slowly.
Yeah, so looking at the projections from, say, even Reserve Bank, so they are predicting the property market will go up by at least 6% within the next 12 months, right? So
Mm-hmm.
6% on 800 is like almost $50,000, 48,000.
Mm. Mm.
Yeah. So, and then again, who knows if the rates come down faster, it could be like if you go back
Go
to
faster.
2020, like some
Yeah.
areas went up by like 25-30% within a year. I
Mm.
remember some transactions happening in Manurewa, South Auckland. Like people were
Mhm.
buying property for like $600,000-700,000, right? And within 6 months, that's worth $1 million.
Yeah.
Because they would just get a resource consent or a building consent on their
Yeah.
property, and all of a sudden some developer will come in and say, oh, because it's all ready to go, I'll pay you $1 million for it,
Just
and
buy
then
it.
just made
Yeah.
300-400 grand like for nothing.
Oh no. So what is your advice now to those who are still keeping their money or maybe they're still wondering if they're ready or not? Oh,
I
if
think
only
if
I.
they don't buy in the next 3 months, they're going to regret it later.
Oh, that's scary.
So
Yeah,
Hang on.
so I
because
have to talk to you soon, Renji.
Yep, yep.
yes,
And
yeah.
I've already
Because
booked an
if you look at it, now is a perfect time for first home buyer if you can afford the lending. Because looking at the
Yeah.
things, rates are high, not much demand out there, so much stock in the market. So you have the upper edge, right? Because there's so many listings, because those investors who are over leveraged or people who have lost jobs, they're putting the
Yeah.
properties on the market. There's so much stock out there, right?
Mm,
Interest rates have come down, but they still haven't come down at the level when people can still afford it. So if
Yeah.
you have the means to pay the mortgage, go for it, right? Because the rates will only go down from here. So let's say I will give you an
Yeah.
example. So let's say you bought a $700,000 house today, right? Um, give you a simple example. Let's say you have a $700,000 mortgage. Let's say the house is 800, right? So you have $100,000
Mm-hmm.
deposit. You borrow 700. You're paying give and take about $1,000 a week in repayments, right? And let's say tomorrow the interest rate come down by, like in a year's time, the interest rate come down 1%. You will then, if you buy at that time, so instead of having a $700,000 mortgage, you might have $750,000 for mortgage
Mm.
repayment at
Mm-hmm.
1% cheaper rate will still be $1,000, right?
Mm.
So the
Yeah.
difference between now and then is you will have $50,000 less in your mortgage.
Yeah,
Yeah.
that makes
So that's
sense.
when you will have an
Yeah.
upper edge compared to the people who are waiting for the interest rates to drop.
That's
Because in New
true.
Zealand, there's no such thing. New Zealand property market, it doesn't have a price tag. It's all supply and demand, right? Cheaper it gets, more people want it.
Yeah, yeah, so true.
Yeah.
So
And with the
right now,
OCR,
sorry.
yeah, with the OCR, banks also adjust their testing rates. So let's say, for example, the interest rate is 7%. That doesn't mean the bank is doing the calculation on 7%. They are
Mm-hmm.
calculating your mortgage repayments at 9%. So if you could afford it at 9%, then only they will give you at 7, because they want to keep 2% buffer in there, right?
True.
Now, because the OCR had come down and the interest rates are dropping, the banks have started to reduce their testing rates as well. So from 9%, now we're sitting at 8.65, 8.75 sort of a testing rate. What it means
Mm-hmm.
is, if you compare it with, say, a month or 2 months ago, your borrowing
Mm-hmm.
capacity has already gone up by 5-6%. So on $1 million
Uh-huh.
borrowing capacity, you would probably borrow another 40, $50,000 from the bank. And what happens
Mm-hmm.
then?
Mm-hmm.
So if you're a first-time buyer, I have never seen any first-time buyer who would stick to their budget. Right? So
Yeah.
if I get someone a $700,000 of an approval, they'll come back to me. Oh, can you make it 750, please? Right? And then you're gonna give them a $1.5 million for approval. They'll be like, oh, I can't find anything in my budget. Can you make it 2 million? Right? It always happens. Always. And that's what exactly is gonna happen again.
Yes.
So all of a sudden, bank hands you like $50,000 more. What are you gonna do with it? You're gonna
Yeah.
That's
spend.
so true.
Yeah.
So do you think like if do you think that if a buyer right now has at least 10% deposit for, let's just say, for 800,000 worth of property, would it be better to actually come now and you they can talk to you, you can give them an advice of how to actually kind of consolidate or talk about their borrowing
100,
capacity?
100%. You need to jump in before the investors come back, right? Because we
Mm,
are doing some pre-approvals for investors, but not many investors just yet.
at the
But then
moment,
if the
yeah.
interest rates come down by another 0.5%, I know they will be coming back, right?
Mm.
Mm,
Because all of a
true.
sudden they'll be like, okay, yeah, we get in before it's too late. Yeah. So
Sanjeev, sorry, I left the industry. But like, I know you might have known
you
this,
need
but I
to
left
come
the
back. Now is a
industry.
good time.
So I left the industry, and one of my question is that how a lot of a lot of sellers were actually quite scared as well to sell at the moment. Would it be, like, do you think it with the OCR going lower and everything, would it be best for a seller right now to actually think again of maybe it is better for me to sell now, or do you think it's
Look,
gonna come up for another 3 months again or something?
it just depends on their motivation, right? So why did they put the property on the market in the first place? Is it because of the affordability, or is it
Mm-hmm.
something else? If it's affordability, if they don't have job to pay off the mortgage, then
Mm-hmm.
sell it, right? But if affordability is not a problem, then it comes to opportunity cost. That's
Mm.
what I tell. I'll give you my own example, right? I just recently sold two of my properties within the
Oh.
last 6 months, right? Those properties were costing me quite a bit of money. They were worth around $1.5 million, right? I sold both of
Mhm.
them because I was topping up the mortgage to an extent
Mm.
where like I was losing probably two of them together. I was losing maybe 45, 50,000 a year because I was topping it up, right?
Mm.
Interest rates were still high.
Yeah.
Yes, there was a little bit of potential, but still not potential. One of them was a freehold, other one was a cross lease property. Then I
Mm.
saw the overall picture, say yes, they will go up in value at some stage, but whatever. But then I was like, I saw some really good deals out in the market, and I got rid of those two. One of the property I lost $50,000, right? Other one I made 50,000, so it's sort of a break even, right?
Oh.
Yeah.
But if I was stuck with like, hey, look, oh, now back in 2021, my property was worth 1.4 million. Now I'm selling it for 800. Then no good. So what I did, I sold those two for 1.5, but I bought a home and income property for $1 million, right? So
Mm-hmm.
that home and income property is giving me the same rent as those two properties, but my
Oh,
Ah.
mortgage is $500,000 cheaper. So
Yeah.
all of a sudden, me topping up my mortgage by $40,000 a year, now I'm breaking even. I don't have to top it up.
so
Right?
yeah, that's an
Oh.
example of, managing your wealth
Cash
or
flow.
what do you call the one? You need to have an idea about these things because you don't want to keep your property if it's you're losing money out of it. So yeah, you're
Correct.
an example of an investor, right? And you're coming
Yes,
back
yes,
to buy
exactly.
more.
Oh, look, it's the opportunity cost. So let's say, yes, your property will go up, and especially for people who are looking to upgrade, right? So if
Mm-hmm.
you think like your property is worth 700, but you want to go into a better school zone, that better school zone gonna cost you $1 million, right? But you're waiting your property to go up to 800, right? So if your one goes up by 10%, now the other property also goes up by
Everything's good
10%,
to go.
right? So you want to make $70,000 here, but then the other one will go up by 100,000.
As
So
well,
it's the
yes.
opportunity cost. So you will be borrowing more, which means it will be even harder down the
Yeah.
line. So I would
That's
rather
true.
do it now while I can buy the other property cheaper because there's not so much demand for that property yet.
Yeah. Another question,
Yeah.
Sanjeev. So you know how I know that they have removed the grant, the 10,000 grant for the government. From now, is there any other like support for first home buyers at the moment? So aside from of course they can use their Kiwi Saver and everything, are there any support at the moment?
Not at the moment, but the good thing about that is like, look, there was only $5,000, and not everyone was eligible for it. Like, and
Good
$5,000 is
thing.
not gonna um,
Yeah.
yeah, make or break the deal. You can just arrange five
Yeah.
thousand dollars from somewhere. Just ask your family or whoever, right? It's five
Mm.
grand. But at the same time, the banks are getting easier. All of a sudden, your borrowing capacity will be more because the testing rates have come down.
Mm.
Um,
Mm-hmm.
Good thing is, let's say, for example, BNZ Bank, right? Even if you don't fit in the 5% Kayanga or a policy, BNZ can lend you 95% today, right? So you only need 5%
Ah.
deposit, even if you don't fit the Kayanga or a policy. Yeah.
Okay.
Also, it depends on banks. They give
Yes.
those kind of.
Not every bank has
Oh.
opened up to that, but I can see where they're coming from. So maybe there
Yeah.
are possibility. If you have a really, really strong income, then
Mm.
yes, there is a possibility of still buying the house with 5%. I mean, if you fit in the Kayanga or a policy, that's the cheapest product. Go for it if you
Mm.
can. But if you still don't fit in that product, there are other
Mm.
options out there. Right? So as I give you an
Mm.
example, let's say you ended up paying extra, I don't know, some people are still stuck with, oh, I don't want to pay just 5%, I want to save 20% deposit. But then to
Yeah.
save 20% deposit will take you another 2 years. And
Mm.
you will end up paying extra $100,000 to
Yes.
save $5,000 in interest. Right?
So true.
That's
That's
stupid.
true.
Yeah.
Oh, so if they're going to reach out to you as a mortgage broker, how
Yeah.
many banks or what are the banks that you have connection with that you
All the
can
banks.
approach and
Yeah.
We
loan?
are one of the, we are
Oh,
the biggest, known market is the biggest mortgage advisor company. And I hope people still know, like if they go on my social media channel or they go onto my website and stuff. So I'm one of the top advisors in the country. We
Mm.
deal with all the main banks and smaller banks. We have a lot of non-bank lenders as well. We have second tier, third tier, private lenders, you name it.
oh, oh, that's great because you've got many options there. Just dealing with Sanjeev and he will scout. The
100%.
best.
Like
Yes. If
look,
if
the yes.
Sorry, if you follow Sanjeev on social media, ate, he has all those stories. He's got short videos that quickly explains everything about OCR, about the changes. He's got all the
Oh,
updates in his social media.
oh, that's
Yes.
great then. I'll find it.
Yeah, I haven't done many videos. I've just started doing it, so I will be posting more often going forward as the interest rates come down, or there's something else special for first home buyer. We love helping first home buyers. So last year we helped. I think I was looking at how many loans we have done. We've done like almost 200 loans last year. So out of that, more than half of them were first home buyers.
Ooh.
Heaps of first home buyers, and then again, like I keep repeating myself. It's an awesome opportunity for the first time buyers for the next, say, 3 to 6 months. If they can get into the property later, should do it.
If you can remember, how many Filipinos have you already talked to or have already
A lot.
approached?
I have a few. I have a few. I
Because my
think a big percentage of our business is Filipino community.
oh, that's good to hear. Two of my friends actually asked for your details, and as far as I can remember, I've forwarded. I think Vikas number. I don't know. I don't
Yes,
have your number, but I've got your email address anyway. So,
that's good.
if you want to be contacted, can you be contacted through phone so I can type it down here?
Yeah, just call me, WhatsApp me, email me, Facebook me. We have so many means.
What's your number?
Yes.
You can post it now.
Mobile number, it's 02123 double
2
six triple seven.
777. There you go. We're gonna add that one here. Oops,
That's the
there.
one.
So that's Sanjeev number. If in case you want to reach out to Sanjeev, because it's free anyway.
Yes.
Yeah.
Hundred
And yeah,
percent.
we're going to.
We again, yeah, that's
This
the
is
thing. Like a lot of people think that mortgage brokers cost money, but they don't. We get paid by the banks or whatever lender. There's hardly like less than 1% chance that we will charge you any fee. It depends on how complex that lending is, or if I have to take you to a lender that doesn't pay us commission, then we'll talk about the fee. But the fee will be discussed upfront. But 99.9% of the cases, we don't charge you anything. Yeah.
Awesome.
Yes.
Oh,
And of
we are.
course, like what everyone has to remember, Ate, is that it would be better. I know these videos can actually really help all those people that are watching at the moment, but it is way better to talk to Sanjeev because it's case by case scenario. So every one of us have different cases. So it's better to actually really sit down with Sanjeev and Sanjeev will explain it to you. And it was so quick. Like you can actually understand it and it's more clear to listen to Sanjeev because he's gonna like literally really quick writing and everything. So yeah, contact Sanjeev now.
Yes, thank you very much.
Thank you so much. Time. See you again next time for
Yeah,
updates.
Yes.
anytime. Thank you. Bye bye.
Thanks, Sanjeev. Bye.
Right. Oh, there you go, man. I know I've
Oh,
already booked.
OCR, Ate. You're gonna be so happy with the OCR.
Yeah, and we're going to renew this coming October, but I think we're not yet allowed to lock it in because it has to be like 2 months, September. Yeah, 2 months before the
Or maybe
refinancing.
by that time the OCR is a little bit more lower.
Yes, so that's why I'm not going to lock it in so quickly. It's too early. I'm hoping for more, like just like what Sanjeev has said, that we're expecting that it
Yeah.
go down again. I was really hoping it will go down, although, yeah, like what he said, it's unexpected. And of course, I'm going to be
Yes.
happy for my son if he's going to avail his first home by the end of this year, as Sanjeev has already talked to us and
Mention.
guided us through
I'm
as to
actually
the next. Yeah.
I'm actually looking around, you know how I regularly check because me and Steven are planning of also buying ourselves and maybe still like kind of, at the end of the day, it's very good to buy at this market. Everything is still low. There's so much competition. It means that you can negotiate further. And
Yeah.
there's just I think like in Manorewa alone, ate, it's more than 70, I think 270 properties.
Wow.
Manorewa alone, and that's just yeah. And for
Recent.
first home buyers like your son, yes, ate, like I search in real estate NZ or Trade Me as well. So and that's not every time I put filter of under price by negotiation or price on application or displayed price, that's around 200 properties that are available, like at the moment, for sale around South Auckland and Manukau and stuff like that. And I think for your son, Ate, it would be good to just put it in, like just do it. Like if he can achieve maybe a cross lease for now too, while he's young, and then from then on everything will increase, then that can be used
Yes.
for the next property as well. So I think with
Exactly.
cross lease, at the end of the day, cross lease is the second of the highest, ownership that, from freehold. So that's what me and Steven are kind of thinking at the moment. Like, would it be also, cost efficient, and if better for us to maybe invest on something small for now and then eventually just start from there.
100%. So just start with little and later on grow it. You've got to study the property if you want it to grow anyway. Because if you will just buy it
Yes.
and you don't equip yourself, like what is the property, how is the property going on every now and how can you
Mm,
kind of wealth through real estate, then actually nothing will happen if you will just
yes.
let other people enjoy what you have invested in. Yeah.
Yeah,
Anyway,
and what Sanjeev said, if you don't do anything for like 3 months from now, you might miss your chance. And I'm like, oh, that hurts me.
because yeah, true. Because we expect that the house prices will go up once the mortgage rates come down.
Yeah.
So yeah,
So
let's grab
yes.
it. Fingers crossed. Thank you everyone
Thank
for joining us again
you.
tonight, and hopefully that gives you a lot of information. Like what we keep on saying, we are having this discussion not only to share ideas with you, but also to equip ourselves because we're into this. We're all in this together. So again, have a good night, and hopefully we can see you again next week.
Thanks, guys. Good night.
Yeah, have a good night. Bye.
Thank you, Ate. Bye.